Time for our ETF report. July was a very strong market story for Canada. We saw the best performance on a monthly basis so far this year. And one of the considerations was there were a lot of Canadians putting money to work in the ETF market. Valerie Grimba is Director of Global ETF Sales and Strategy for RBC Capital Markets. She joins us here in studio. Valerie, good morning to you.
Good morning. Thank you for having me.
So I know August has been a little bit volatile, but I keep looking. July 31st, we had this all-time high for the Canadian market. And when we look at the money flows, there was a lot moving into ETF products. What were you seeing?
Yeah, so July was another strong month for flows. It's kind of following on a big year for 2024, actually. We're kind of on pace to hit the highest level of ETF fund flows ever, surpassing 2021's record. And so what we're seeing is a lot going on in the macro backdrop, obviously, and people are using ETFs as a vehicle to put their money to work.
So do you think this idea, like we had tech, and then more tech was like dominating the conversation, it felt, for the first half of the year. And then investors started broadening out their investing interests.
Yes.
Did that play a role in some of the fund flows, do you think?
You know, it still feels the tech is kind of like Marsha.
Okay.
And it still is the dominant story. I like to say it's a bit of a kind of like a black hole, this gravitational force pulling everyone towards U.S. equities. And the Canadian ETF flows have been primarily into U.S. equity funds. So we're kind of seeing Canadian investors kind of follow that gravitational pull towards U.S. equities, even in the past week where, you know, we saw this drawdown, this quick drawdown in the S&P 500. Actually, Canadian-listed S&P 500 ETFs saw strong inflows last week. So to a certain extent, Canadian investors are trying to buy the dip.
Okay. And then when we talk about interest rates, which is dominating the conversation in the U.S. again today, obviously we're already into a rate-cutting cycle here in Canada. Have you noticed any trends with, let's say, bond ETFs by comparison?
Yeah, absolutely. We're seeing a lot of movement there as well. And I think, again, kind of this shuffling of assets or reallocation or kind of, again, shifting portfolios to adjust for changing macro conditions. We see that in the ETF landscape as well. So as far as fixed income ETFs go, we've obviously seen kind of yields compress and bonds rally. And so we've seen investors take a bit of money off the table, so selling from kind of intermediate duration aggregate bond ETFs and moving into the shorter end of the curve here, which kind of makes sense.
So it's interesting, like everybody's trying to make sense of what's been happening in August. It can be a volatile month. Sometimes it's a month that, you know, is sleepier because not as many people are in the market. To see such strong ETF flows in a month like July, is that significant to see a summer month where you're seeing record numbers?
Yeah, I think that's like a key point to hit on, and it's indicative of, you know, changes happening within the market. And I think, again, the path isn't clear, isn't kind of de facto. We've seen this playbook before. And obviously there's a lot going on geopolitically, elections, this rate cutting cycle. There's just a lot of kind of gyrations happening under the surface. And so investors are trying to get ahead. And I think we'll continue to see that happen as events unfold from here.
Okay.